Islamic capital market is one of the components of Islamic finance. There are two other components of Islamic finance, which are banking and takaful. An Islamic capital market, or ICM, is where transactions are carried out according to the guidelines of the religion of Islam and for Muslims. Muslims are prohibited from engaging in business activities that are unshuri or riba, gambling or maisar, and ambiguity or gharar. The involvement of Islamic finance in the financial market continued to grow throughout the 1970s and the 1980s, where a lot of Islamic banks, takafuls, and Islamic investment companies starts opening all around the world. In the year 1996, an establishment called the Sharia Advisory Council, or SAC, was formed in Malaysia to advise the Commission on Sharia matters regarding the ICM. There are exactly 80 countries that practices ICM, like Malaysia, Saudi Arabia, Bahrain, Pakistan, Indonesia, Turkey, and more, and a total of 1,400 Islamic finance institutions are in operation. In the Islamic capital market, there is a term called sukuk that means an equal value of ownership or investment is divided accordingly using Sharia principles, and the concepts are approved by the Sharia Advisory Council (SAC). There are a few standardizing and regulatory authorities of Islamic capital markets like International Islamic Finance Market (IIFM), the Islamic Financial Services Board (IFSB), the Sharia Board, the International Islamic Rating Agency (IIRA), and a few more.
Function of Islamic capital market. The Islamic capital market is a component of the overall capital market in Malaysia and play an important role in generating economic growth for the country. The function of Islamic capital market are parallel market to the conventional capital market and play a complementary role to the Islamic banking system in broadening and deepening the Islamic financial market in Malaysia. In Islamic capital market, transactions are carried out in ways do not conflict with the conscience of Muslims and the religion of Islam. Here, there is a section of religious law so that the market is free from activity prohibited by Islam such as usury or riba, gambling or maisir, and ambiguity or gharar. As the market became more complex and sophisticated, it needed supportive infrastructure so that system could operate and function more efficiently and effectively. The SC early initiative in setting up a dedicated Islamic capital market department with strategy and development business group was to provide the much needed infrastructure support. The mandate of the Islamic Capital Market Department is to carry out research and development activity, including formulating and facilitating a long-term plan to further the strengthening of the Islamic capital market in Malaysia. The Sharia Advisory Council was established in May 1996 to advise the Commission of Sharia matters pertaining to the Islamic capital market. The members of the Sharia Advisory Council are qualified individuals who can present Sharia opinion and have vast experience in the application of Sharia, particularly in the areas of Islamic, economic, and finance. The Islamic capital market refers to the market where activities are carried out in a way which does not conflict with the principles of Islam. According to Islamic Capital Market Task Force report, Islamic capital market is a market where investment, financing activity, and products are structured in accordance with Sharia principles. The importance of capital market in Islamic financial system are the fact that Islam prohibits interest and encourage trade. There are five important functions of Islamic capital market, which increasing liquidity, construction of diversified portfolio, mobilizing the capital, provide risk management tools, and reduce the transaction costs. Objective of Islamic capital market: facilitate the development of various competitive products and services related to the Islamic capital market, create an independent market to mobilize Islamic funds effectively, ensure an appropriate and comprehensive accounting, tax, and regulatory framework, and to enhance the international recognition of the Malaysian Islamic capital market.
Sukuk market derived from the plural sak, which means legal instrument, deed or check. Sukuk market is an Islamic financial instrument that represents asset ownership. In addition, Sukuk market is also an investment certificate that has a claim not only on the cash flow or revenue generated, but also has a claim on ownership of asset, group of asset, or right on debtors. In the Sukuk market, different types of Sharia compliant products are being structured in line with Islamic financial contract. This include Sukuk al-Ijarah, Sukuk by Bitaman Ajil, Sukuk al-Murabahah, Sukuk al-Istisna, Sukuk al-Musyarakah, and Sukuk al-Mudarabah. Equity market is a place where Sharia compliant stocks are traded. All securities are traded in the primary and secondary market, with initial supply being made in the primary market. Only directional stock or funds are invested. This does not include share of company involved in pig, alcohol, gambling, conventional banking or insurance, pornography, and all that is prohibited by Islam. Under the Islamic equity market, Sharia-compliant securities transactions such as Islamic Unit Trust or Mutual Fund, Islamic Real Estate Investment Trust (REIT), Islamic Indices, Islamic Exchange Traded Fund or ETF, and the Islamic Venture Capital or Private Equity are taking place. The derivative market refers to the financial market for financial instruments such as underlying asset and financial derivative. There are four kinds of participants in a derivative market: hedgers, speculators, arbitrageurs, and margin traders. There are four major types of derivative contract: option, future, forward, and swap. Despite its importance in the development of the financial sector, derivatives are very few in countries where the suitability of capital market transactions with Islamic law requires the expansion of Sharia compliant structure. Islamic finance is regulated by Sharia, which prohibits speculation but stipulates that income must be earned as a profit from joint business risk rather than guaranteed benefit or returns. Commodity market is a physical market or virtual market used to buy, sell, and trade raw or primary products such as oil, gold, or coffee. There are hard commodities, which are generally natural resources, and soft commodities, which are livestock or agricultural goods. Investors can gain exposure to commodities by investing in companies that have exposure to commodities or investing in commodities directly via future contract. The major U.S. commodity exchanges are the Chicago Board of Trade, the Chicago Mercantile Exchange, the New York Board of Trade, and the New York Mercantile Exchange. Forex is a market to facilitate trading one foreign currency with another. A large number of exchanges are made in the bank deposit and involve US dollar. More than $1 trillion of foreign exchange trading takes place every day. Foreign exchange traders handle the most transactions. Businesses, financial institutions, government investors, and individuals use the foreign exchange market to adjust their currency holding. The money market is the financial market in which short-term financial assets are bought and sold. In addition, the money market is also known as financial assets, such as stock and bond, which are traded in the market will mature in 1 year or less. More than $1 billion of transactions takes place in this market every day. U.S. financial institution, company, government, and the treasury active in the money market as they tailor their short-term portfolio.
Right, now I will tell about the development of Islamic capital market. So today the development of Islamic capital market in Malaysia has received attention from foreign countries. Malaysia is one of the exemplary countries in the development of Islamic finance. In order to continue the development of the Islamic capital market in Malaysia, the Security Commission has taken several initiatives to continue the marketability of Islamic capital to remain in the Malaysian economy. Establishment of the Islamic Capital Market Unit, which is called as UPMI, is an initial initiative undertaken by the Security Commission under the Market Policy and Development Division in 1994. The establishment of UPMI is to carry out research and development activities, including conducting long-term plans. In 1995, efforts were made further by establishing as Islamic Instrument Research Group, which is called as KPII, comprising Sharia expert and corporate figures. The membership is as an advisor to the Security Commission in conducting a study on the position of existing conventional investment instrument in the market from a Sharia point of view. With the success of KPII in exploring the fundamental of Islamic capital market development, the Security Commission has expanded KPII's role and upgrade it to more formal body called the Sharia Advisory Council in 1996. The formation of the Sharia Advisory Council is to advise the Security Commission on matters related to Sharia as well as activities related to the Islamic capital market in Malaysia. In 2001, the Malaysian Market Master Plan was launched with contain 13 proposals to make Malaysia as an international centre for Islamic capital market activities. The acceptance of the Islamic capital market in Malaysia today has further boosted the development of the Islamic market. Malaysia has recorded a consistent performance year after year on the Islamic capital market value. The development of Islamic market-based product and institution has shown a massive increase. Several of Islamic capital market products are growing today, which are sukuk, Sharia-based securities, and Islamic unit trust. Okay, sukuk. First, sukuk is the certificate or financial document that explain the right of individual participation in a Sharia compliant asset, and it is a growing market product. The sukuk market is an important source for the financing needs of investment activities. Meanwhile, for investor, it provides the potential to diversify their new investor asset classes. In sukuk, there are several divisions of sukuk that have been published, including which is such as sukuk al-mudarabah, sukuk al-murabahah, wa al-bay' bithaman ajil, sukuk ijarah, and sukuk istisna. Next is Sharia-based securities. Okay, Sharia-based security is listed security on Bursa Malaysia that follow the Sharia compliant criteria as outlined by the Sharia Advisory Council. In addition, it is a major reference for investors in deciding to buy or sell a security. If there are any security that do not follow the criteria or the benchmark as determined by the Sharia Advisory Council, then the security will not be listed in Sharia compliant securities. Right. Then the third is Islamic Unit Trust. Okay, so Islamic Unit Trust is an investment scheme in investment funds collectively based on Sharia principle. For small investor in need of financial resources, Islamic Unit Trust offers specialized fund in a diversified portfolio of securities and are managed by a professional portfolio manager and registered with the Security Commission. The existence of the unit trust fund can be used as a platform for investors on a method of investing security that is easier, more comfortable and time saving compared to trading individually.
This part will be on standardizing and regulatory authorities. As Islamic capital market offerings need to be Sharia compliant, there exists a need for standardizing and regulatory authorities. These authorities set and enforce standards and operating procedures in Islamic capital market. First, there is the International Islamic Financial Market, IICM. It was founded in 2002 by 6 founding members, which are the Central Bank of Bahrain, Bank Negara Malaysia, Bank Indonesia, Islamic Development Bank, Central Bank of Sudan, and Authority Monetary Brunei Darussalam. The IIFM is based in Bahrain. It is the global standard setting body of the Islamic financial services industry. The IIFM aims to promote the standardizing of Islamic financial products at the global level. It has published 12 standards in areas such as Islamic hedging and liquidity management. Next up is the Islamic Financial Services Board, IFSB. It was established on 3rd November 2002. It is based in Kuala Lumpur, Malaysia. Currently, it has 188 members in 57 jurisdictions, including 80 regulatory and supervisory authorities, 10 international intergovernmental organizations, and 98 market players. It is the international standard-setting body of regulatory and supervisory agencies in Islamic financial services. It introduces or adapt international standards that are consistent with Sharia principles. The function of IFSB supplements those of the Basel Committee on Banking Supervision, International Organization of Security Commissions, and International Association of Insurance Supervisors. The IFSB has issued 34 standards, guiding principles, and technical notes in liquidity risk management, Sharia governance system, governance for collective investment schemes, and much more. Next, in Malaysia, we have the Sharia Advisory Council of the Securities Commission Malaysia, SACSC. This is a different organization than the Sharia Advisory Council of the Bank Negara Malaysia. The SACSC was previously known as the Islamic Instrument Study Group under Securities Commission. The IISG was officially called the Sharia Advisory Council in 1997 under the endorsement of Ministry of Finance. The aim of the SACSC is to ensure the compliance of Sharia principles in Islamic capital market. It advises the Securities Commission on all matters and issues pertaining to the Islamic capital market. Lastly, there are Sharia Committee in Islamic financial institutions. This is an internal committee that must be established by all license holders under the Islamic Financial Services Act. For one to be appointed to the Sharia committee, one must be a Muslim, is fit and proper, and Sharia qualified. Sharia qualified means that the person must either be a holder of a minimum of bachelor's degree in Sharia or possess solid knowledge in Sharia with reasonable Islamic finance knowledge and example. The committee must evaluate and approve of all Islamic financial products offered by the Islamic financial institution. Furthermore, the Sharia committee provides advice on SAC rulings. They must meet at least every 2 months to discuss on issues pertaining to Sharia compliance in the financial institutions. They work closely with the board to ensure Sharia compliance is being achieved. For rulings stricter than the SAC, the board must notify Bank Negara Malaysia. That's all for standardizing and regulatory bodies in Islamic capital markets.
The challenge for other Muslim countries like Bangladesh is to overcome its late entry against the well-established jurisdictions all over the world. Other subsequent challenge will be to also educate the masses and other industry stockholders regarding the Islamic financial principles, products and investments. The challenge for them is to motivate authorities to provide suitable platform and policies to make such initiatives viable. The Islamic financial operations are subjected to strange rules different from the ones applicable to conventional operations. There are a number of challenges faced by ICM. For instance, in many cases, the Islamic capital market has to comply with the regulatory provisions meant for the conventional system, which has an entirely different underlying objective and approach. Additionally, it should be noted that the relatively young ICM is operating in the same environment with its long-standing conventional counterpart, which has been the arena for centuries. The risk involved in profit sharing seems to be so high at almost all of the Islamic banks in Bangladesh have resorted to those techniques of financing, which bring them to a fixed, assured return. Presently, most of the investments of Islamic banks are made up on markup basis. As a result, the ideal modes of investments are quite absent in their practices. Concentration of Islamic bank investments in short-term trade is a relatable problem in Islamic banking. The badly hit post-crisis economy presents another challenge in the form of slight investor confidence in the region. Besides, industries need to collaborate and formulate a joint strategy to develop Islamic capital market policies for the country. Finally, the highly competitive nature of organization presents another challenge for the sound functioning and growth of the Islamic capital market. Islamic organizations are in competition with interest-based organizations and are therefore anxious to earn at least as much on their investments and will enable them to give a return roughly comparable to prevailing interest rates to their investment account holders. So, what are the ways to overcome? First of all, monitoring Islamic bank depositors. As most of the liabilities consist of investment deposits placed on a profit-sharing basis, this arguably reduces the bank's risk in comparison to deposit where interest has been paid regardless of the profitability or losses of the bank. Furthermore, the Islamic banks value the deposits which is not even been guaranteed, and their value may be reduced in the case of severe losses. In practice, therefore has never been a case where the value of deposits has been written down, and hence the absence of the guarantee has not affected the depositors' interests. Second, monitoring in Islamic bank assets. The compositions of Islamic bank assets may also pose problems for regulators who are accustomed to dealing with conventional banks. Islamic banks cannot hold treasury bills and bonds or other interest-yielding securities. Hence, conventional measures of liquidity cannot be applied to Islamic banks. Yet, this is one of the measures that is important for regulators in the role of as protectors of depositors. Islamic banks tend to hold together cash reserves than conventional banks and short-term trade finance assets that can be regarded as fairly liquid, but these are not tradable instruments and therefore cannot be transformed into cash until the importer being financed repays. Bank inspections. There is a little reason why most of the bank inspection issues have to be treated differently from Islamic banks and conventional banks apart from the issue of assets described above. Issues such as the creditworthiness of the institutions are just as important for Islamic banks and conventional banks if depositors are to be protected, and there will be no case of threatening questions such as lending seeks to manager and or major shareholders, or indeed the duties and responsibilities of the directors are differently. Thank you.
Above all, Islamic capital market is the outcome of growing need for Islamic finance. Capital market is known as an instrument with longer term of maturity. The instrument include government, corporate and municipal bond, corporate stock and mortgage. Mostly, the bond in Islamic capital market are sukuk. The function of Islamic capital market mainly is to facilitate transfer of investable funds from those that having surplus need to those requiring funds to meet short and long-term liquidity need. As for Islamic capital market, they are consist of market and product. Type of market are sukuk market, equity market, derivative, commodity market, and forex, and money market. While for product consists of mudabaha sukuk, bicara sukuk, partnership sukuk, ordinary stock, preferred stock warrant, mutual fund, and single stock future. Since almost a decade ago, when the first private debt security (IPDS) were issued, the Islamic capital market has developed and produced a wide range of equity product, debt security, and managed fund. There can be doubt that the government is intent on spreading Malaysia into a leading international Islamic capital market center. As a result, until nowadays, Islamic private debt security continue to be a favorite instrument among corporate bodies for long-term financing. Upon that, we believe that further development of the Islamic capital, not only in Malaysia, will be broadened and going depth to the overall capital market. Hopefully, in future, Islamic capital market can provide a significant contribution to overall objective of the Islamic banking and finance system as set out in the financial sector master plan.